Talking about the state of the economy, let me also welcome on board Indranil Sen Gupta, India economist at Bank of America Securities, joining in on the show right now. Indranil, hi, good morning. Good to have you on the show. You know, I was going through the note that you've written just yesterday, and it states that you expect India to be the third largest economy in 10 years. What gives you this conviction that India is going to manage to take the lead from China, Japan, Europe, and US?
We see the economy growing at 9% nominal. That's 6% growth, 5% inflation, 2% depreciation for the next 10 years. The three drivers, the demographic dividend, which we've all been talking about for the last 15, 20 years, is actually going to kick in from 2028, help savings, investment. Secondly, there is financial deepening, credit to GDP ratio, which is around 40 to late 40s, early 50s% of GDP should jump to almost 100%. And thirdly, there is the emergence of mass markets, which the US probably saw 100 years ago. The price of an entry-level car, for example, today is 2.5x, down from 14x in 20 years ago. And we think that this goes to 1x by the next years. Apart from this, there are two big catalysts that we have seen emerge in the last 1 year. The first is that the RBI has now re-achieved adequacy of FX reserves. So we call this, India's silent revolution. So because you now have sufficient FX reserves, you also are de-risking India from global contagion. You're likely to see a much more stable rupee for the next 10 years. So that's number one. Number two, real lending rates have begun to come back. So for the last, I would say from 2016, high real lending rates were a drag on the economy. And that has got corrected, after Mr. Das took over, began to ease on a sustained basis. So this, more than anything else, it is these two factors, the fact that RBI is back to adequate FX reserves and the fact that real lending rates are now coming off, that give me the confidence that India will emerge as the third largest economy in 10 years.
Sure. Indranil, are there any assumptions that you're making when you set that, India's GDP is going to move up 2 notches higher and we are going to become the third largest economy? What assumptions have you taken for both inflation as well as interest rate trajectory? And are they also going to be guiding factors for the GDP to move higher?
Yeah, so we are looking at 6% growth, real terms. We are looking at 5% inflation, pretty much in line with our estimates of threshold inflation, which even the RBI has now come out with, and 2% depreciation. Interest rates, we kind of assume that they will be at a normal level from that perspective.
Okay, that's what is, indicating in terms of where the growth in the economy is going to be headed. Also, Indranil, I wanted to understand whether India moving up 2 notches from being the 5th largest economy in the world already is also at the cost of other countries easing off, or would you say that it's going to be a rising tide which will take the other global economies as well higher and India as well along with it in the next 10 years?
Yeah, I think that, India has relatively higher growth than the rest of the world. So, we began, there's a chart in my report which shows you that, we began by overtaking Canada, I think in 2012, and along the way, there was Brazil, there was Russia, the UK, France, and I think 2027, Germany. So we are growing around 9% nominal. Japan, for example, is growing at 1.4%. So we are growing faster because of the structural drivers that I mentioned and because of the two catalysts, RBI buying back FX reserves, interest rates coming down. So that's one. Secondly, obviously the globe matters, but India should be doing better than other countries, even if there is a global downturn. Especially so now, given that we have sufficient FX reserves that de-risk us from the rest of the world. So, effectively speaking, the kind of large depreciations we saw during the global crises of 2011 or 2013 or 2018 should now be history.
Indranil, good morning. Wanted to understand from you in terms of while we are looking at things recovering overall with the economy, what do you think could be the spanner in the works? What would be some of the key concerns that you would have that would derail or deter growth apart from, of course, the coronavirus vaccine? What else is it that you would take cognizance of?
Medium term, it is oil. It is always oil. So obviously, if oil goes beyond $100 a barrel on a sustained basis, that obviously will hurt the Indian economy. Otherwise, I think the internal drivers of the Indian economy are very strong from a structural perspective. And now you have sufficient FX reserves to ward off contagion. So when you take both into account, I think the biggest challenge is if oil shoots up and stays at more than $100.
And how are you looking at the India growth story as well, or likely to overtake Germany by 2027? What do you make of the current parameters at hand with respect to the fiscal position? How you're looking at the government's divestment plans as well that are currently taking shape in full throttle, as well as measures to deal with the pandemic?
Measures to deal with the pandemic are near term. We expect growth to contract 6.4% this year and rebound by 9% next year. As far as the current spate of reforms announced go, we have not explicitly modeled that in our numbers. Were we to do so, we would probably see a 50 to 100 basis point increase in GDP growth. And then India would overtake Japan in 2030. So, it's very close, whether it's 2030 or 2031.
All right, Indranil, thanks very much for sharing with us your outlook on the overall economy as well as where India stands, the demographic dividend, as well as the interest rate scenario and some of the other key parameters.